Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering the recently issued Clean Vehicle Credit Guidance that addressed several open questions, such as the definition of sales price and what happens if a vehicle's classification changes. We'll also be covering the Clean Vehicle Credits in the October 25th session of Spidell's quarterly Federal Tax Update webinar, along with beneficial ownership reporting rules, the latest research expense guidance, and more. For more information, go to spidell.com and click Webinars. The Inflation Reduction Act made significant modifications to the Clean Vehicle Credit under IRC Section 30 Cap D and created two additional Clean Vehicle Credits: the previously owned Clean Vehicle Credit under Section 25 Cap E and the Qualified Commercial Clean Vehicle Credit under Section 45 Cap W. The IRS has issued new guidance regarding the Clean Vehicle Credits, which focused on the advanced credits available through dealerships and answered several other questions. We will cover the advanced credits available through dealers in a later podcast because those provisions don't go into effect until January 1st, 2024. Taxpayers can only claim the Clean Vehicle Credit or the previously owned Clean Vehicle Credit if their AGI is below the applicable threshold for the year the clean vehicle is purchased or the prior taxable year. When a taxpayer's filing status changes during the 2-year testing period, the taxpayer will apply the AGI limitation based on their filing status for each of those years. The AGI limitation for the Clean Vehicle Credit is $300,000 for married taxpayers filing jointly, $225,000 for head of household filers, and $150,000 for all others. The AGI limitation for the previously owned Clean Vehicle Credit is $150,000 for married taxpayers filing jointly, $112,500 for head of household filers, and $75,000 for all others. Vehicles are only eligible for the previously owned Clean Vehicle Credit for the first qualifying transfer of the vehicle since August 16, 2022. Sales and other transfers between dealers are disregarded for the purposes of applying the first transfer rule. In order to qualify for the previously owned Clean Vehicle Credit, the vehicle's sales price cannot exceed $25,000. The IRS has finally defined the term sales price for this purpose. The sales price of a previously owned clean vehicle means the total sales price agreed upon by the buyer and the seller in a written contract at the time of sale, including any delivery charges and after the application of any incentives. But it does not include separately stated taxes and fees required by state or local law, like sales tax. Also, the sales price of a previously owned clean vehicle is determined before the application of any trade-in value and does not include separate financing, extended warranties, or insurance. In addition to other requirements, a vehicle only qualifies for the Clean Vehicle Credit if its MSRP does not exceed $80,000 for vans, trucks, and SUVs. The MSRP limitation is $55,000 for all other eligible vehicles. The IRS addressed whether a taxpayer can claim the Clean Vehicle Credit if their vehicle's classification changed after the date of sale. For example, if a client purchased a qualifying vehicle for $65,000, but the vehicle is later classified as an SUV, this shifts the vehicle from having a $55,000 MSRP limitation to having an $80,000 MSRP limitation. The IRS guidance states that the updated vehicle classifications from Notice 2023-16 apply, even for vehicles that were purchased prior to the date the notice was issued. We have detailed information on the advanced credits available through dealerships in the November issue of Spidell's Federal Tax Letter. For subscription information, go to spidell.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.